And yet again, another reason to encourage the distrust of shareholders. A delayed filing was mentioned today, and it forced price action to revisit some relevant lows. Let's pop open the hood here to investigate the probabilities, but I must warn you, this video may contain some graphic targets, and some of which may not be for the faint of heart. Welcome back to the channel on this Microcap Monday. This is ARCa. Let's dive into ticker symbol GTII. What is up, you guys, and welcome back to the channel. Do me a favor and make sure to hit that like button, subscribe to the channel, and do all those little silly things to encourage visitors back into the loop here, right? That's my little guy sitting right next to me, right, making sure that we are doing okay and observing the charts in the right way. So if he chimes in and says hello, do not mind that little guy. So let's go ahead and dive in right into this side of the analysis here, where we can see that it's really in simple forms here, right? The annual report of Form 10-K for the period ending December 31st, 2023 cannot be filed without unreasonable effort or expense within the prescribed time period, because management requires additional time to compile and verify the required data, right? So this is upsetting, to say the very least, right? And it definitely showed in price action. And in fact, if we can go ahead and just kind of revert here and put ourselves right back into the price, we can observe that there was already a manipulative shot here, right there at about this is right at market open today, right? So 6:32 a.m. that marks just 6:32 a.m. with 50 seconds. That's pretty much 2 or 3 minutes into the market open, and we had already received a shot of manipulation here, and price action essentially continued to the downside thereafter. So, and this is all part of today's price action, right? We are observing here this on April 1st, which is the release of this of the filing here, or the lack thereof. Okay, so now that we have identified that, I will just express this one more time, okay, you guys. I know that it's been a while since I've really covered GTII here, and it got a little silly, right? Because a lot of times people can't really take my honest truth, right? And I think I owe it to a lot of the GTII members and BBIG and a lot of other stocks, right? I owe it to you guys, because you guys have always, the majority of you, right, have always followed me here because of my honesty and because of the way that I observe markets. I'm not going to say something's going to go up when it's going to go down, and I'm not going to say it otherwise. I don't care who you are, right? So this is just the way that it is, whether you like it or not, right? This is why I'm warning you right now, right? So let's just go ahead and dive into the probabilities here and see what's good. We're going to use every single trick that we can in the book in order to determine what the price action can do leading into the way, okay? So let's go ahead and just block the visibility here for the composure indicator that displays to us manipulation in the chart. So in a very minute way, in an immediate short-term time frame here, 30 minutes, let's use that, right? This is a dead cat bounce formation, and we can use this to determine a psychological take profit, right? So or a price. Let's not use it as a take profit. Let's use the wording as a price objective, an implied target, right? So let's go ahead and draw the line right here to match these pivots, right, perfectly. Now the top side of the dead cat is right about here, right? So the way to determine that price objective, you simply take that trend line from the top side to that very bottom side of the dead cat, then you apply it to that bottom trend, and that displays to you the next target. So from here, we can observe a target that's relevant to 2159, right? So this is for the immediate short-term time frame. Now, is there a potential for us to realize a downside target like that? Well, let's take a look here. In fact, there is. Sorry, you guys, that's just my dog chewing on everything. Anyway, so yeah, let's just go ahead and take a look at this resistance here on the 30-minute time frame RSI, right? We're already resisting from it, and the problem here is that the SMA 14 is sitting pretty much at the border between both of the gravitational points. The fact that the RSI signal is already resisting, that can tell us that we're resisting from the gravitational point here. I'm sorry, from the inside gravitation, which is pretty rare. This, if it does go up ever so slightly, that would be in respect to what we're observing right now. That would be the touch of your 23-cent zone, maybe all the way up to 23.19 before facing an actual failure to the downside, right? Based on that resistance grab. So now let's take a look at your hourly time frame to see just how much we have as far as the downside thrust. Okay, so the hourly time frame is kind of showing us a little bit of a push to the upside here, right? So hold on just a quick moment here. Okay, great. Man, my dog is finally out. He was chewing on that thing like chicken. It's like right next to my ear. I'm like, dude. And my son right next to me too. Oh, man. Anyway, teams. Oh, goodness. Lunacy here. All right. Anyway, so yeah, that would be the validation of the resistance before we can face a continuation to the downside. First immediate target to observe here is 21.59. Let's pull up the stats window and see if we have anything of relevance, right? So, of course, go ahead and take a look at this, right? In a discretionary manner, we were able to identify that 21.59. The current ATR is set to around 1 cent, right? So 107 is your average true range based on an hourly time frame, right? So whenever an hourly time frame candle opens up, we can move on average this amount. Now, the bottom side to the hourly time frame, to at least the next hourly time frame, is actually going to land right over here on this target, 21.92, current ATR low. And where's our target? Right about here, 21.59. We definitely have some confluence here, at least for the immediate short-term time frame. Now, I want to display to you this very same formation. There's a reason why I'm showing you this formation, right? It's because there is something of a deeper signal than just that. And it's going to require us to visit a much larger time frame. And that's going to be actually in the bi-weekly chart. So let's go ahead and visit that now and take a look at this, right? So this is actually another dead cat bounce, right? And this is what you're observing right here. This is the sharp decline. This is that bounce to the upside, just like the one we saw in the hourly time frame, except this is on a macro signal. Now, the implied target for this, just like we did before, right? We take the trend line from the very top side all the way to the bottom side, and we apply it below, and then you're going to see the target that I've actually been talking about here for a few months. And that's going to be the target of 10 cents. Now, there is a reason why, other than just this dead cat bounce. And of course, the negative freaking catalyst that came out, which is a real shame here. It feels like it's just a bunch of noise now. Like it's all talk, no action, right? I feel like they had at least some good news coming out, right? But then, man, just no follow through. So let's take a look at this, because as you can see here, I have it sitting as a range. Now, why in the world would ARCa have this sitting at a range? And why in the world is his range slightly away from his bottom side target of 10.12? Sorry for the third person, but let's just go ahead and evaluate that now without any further ado. So let's kind of zoom out here, right? And we're gonna go back in time, all the way back over here to May of 2017, the 22nd day. So let's observe this gap right here. So this is going to be Monday, May 22nd to Monday, June 17th, right? Interesting how well, obviously it's the gap, right? So these are the biweekly candles here. So this gap is the magical gap that I spoke of months and months ago, that the price action of GTII may want to come by. Yes, it's been covered before, but that doesn't matter. The thing is that every gap that we have in the past is there is a potential for us to use it in the future. So now as we move forward and look at our present situation, using the dead cat bounce target takes us perfectly to that target there. And trust me when I say that I have a lot of people telling me that they're going to load the boat at 10 cents, right? That's not financial advice, and do not do that. In fact, don't practice any type of executions based on what I'm saying here. I'm just giving you the raw results here. Okay, and now as we as we use this, the inverted Fibonacci retracement, I can go ahead and I can go ahead and display to you that the 2 fib is landing right at our target as well at 10 cents. So geometrically, it is a potential. We also have the dead cat bounce, so psychological too, and we have a historical support that we can find here. So not only is it tangible, but it's also geometric and psychological. So now, what is that target? I guess can we retrace there based on maybe a more immediate short-term time frame, or from here, since the play is on a bi-weekly time frame? Well, yeah, I guess we could, right? So let's just let's do that. Actually, from this current time frame, this is the target that we're observing. So let's bring this back to maybe the 4-hour time frame, and I'm gonna just take a look at the stats here, right? Because we may be able to see something there, even if it's within the shorter time frame, shorter time frames, right? So let's just observe here, and we'll find the sweet spot in order for us to determine that continuation to that downside. What I'm really looking for here is that if I have any rhyming to the area of about 10 cents, then I'm going to use that time frame as a critical time frame to determine how fast or slow this move can be figured, right? So far, I am not seeing the downside here based on all of these time frames here. I may even have to go back into the 5-minute time frame, and it's okay. That's why we're exploring this, right? I'm doing this live. I haven't prepared any of this. I am giving it to you as it comes right now. Okay, so there we go, right? So this the 3-day, and maybe actually it's going to be the 3-day, and let's see the weekly just in case. Nothing on the weekly, not quite. And on the 5-day, no, not quite either. So let me just kind of hover around there. We already saw the bi-weekly. So let's look at the monthly, because we got really close there on that. Yeah, actually, you know what? It's definitely going to be the 3-day time frame, and I'll show you why. So the 3-day time frame is displaying to you the lower bound of the second standard deviation multiplier at a support of 11 cents. So that is telling us that we could face a continuation to the downside, and we're not actually seeing it here through the 2 standard deviation from this current mean, right? So we can see it here on a macro scale without the expansion or without the contraction here. We can actually see this at 11 cents too. So it does make sense statistically as well. So geometrics, statistics, psychological targets, and historical tangible supports are all agreeing to a potential drop into this area. What could make the price action reject would actually be something as simple as the 1.618 at 12.82. Okay, so that's something that could prevent price action from continuing onto that 10-cent zone. Okay, now let's man, this is a really bearish signal here too, right? We're getting a massive crossover on the 3-day time frame, SMA 14 below that. So stochastic momentum is also dropping here too. Let's get a little more granular here, right, and see if we can continue this. Well, this is an expansion phase starting from critical volatility lows. We're expanding here, and we're also dropping. So while we have this pivot towards the downside and we're expanding, we're technically hitting the throttle for a downside. So this is telling you that there is sell pressure introduced into the asset, since we are getting the disbursement of returns, or there is an increase of the frequency for transaction, right? So this is absolutely hitting the gas with a downside pivot. So this is definitely, whether you want to consider that short or take profit, or the combination of both short positions and stop losses being hit from the longs, all of which are leading towards this continuation to the expansion phase, right? So that's just, a thicker frequency of transactions. 3-hour time frame still with a downside pivot coming out of critical contraction with that throttle towards that upside as well. Same situation with the bi-hourly time frame and a downside pivot. Team, there is no reason for me not to give you the target that I gave to you already. Okay, so in fact, we're doing this move to the downside with coming out of critical contraction in almost every single time frame. So that means that this signal has been fired off for a continuation to the downside here, starting from the 30-minute, let me see, starting from, oh, that's a different signal there. Starting from the, let's see, yeah, from the hourly time frame, out of contraction into expansion with a downside pivot, from the hourly into the bi-hourly. Here's your expansion, downside. Look at it as we go up. 3-hour time frame, expansion, downside. 4-hour time frame, expansion and a downside, right? 6-hour time frame, expansion from critical contraction, right? And a downside pivot. Your 8-hour time frame, expansion with a downside pivot, and your 12-hour time frame, expansion with a potential downside pivot. We're already getting the traces of it. So this means that we are that there is a higher probability that GTII can face a multiple day or a multi-day correction. Okay, so please be safe out in the markets. I need you to practice risk management here and know that the probabilities for reaching some lower targets are absolutely in order, okay? And I would really like for you guys to observe what the daily time frame ATR is, okay? So your daily time frame ATR reaches about almost, say 3 cents on average, right? So tomorrow, if this opens up at 23 cents, then we could be headed for 20 cents. And then 20 cents would, drop us to 17, and then 17, and so on, right? So just be careful when practicing here, okay, team? Know for a fact that it doesn't have to follow the rule of 3 cents either. This can increase the rate. It could expand, meaning that it could go beyond the 3 cents. So I need you to watch out, okay? But I will say this. If we start breaking this inflection here of 1897, that's game on here for a downside, okay? Immediate short-term time frame 1590 would be the reason why you would bounce. Why 1590? Because all of this support right over here is 1595. Now take a look at your one spot 272, 1596. You have a geometric and a tangible reason why to bounce there and validate your 19 cent as a resistance before a continuation to the downside. The probabilities of stopping at the one spot 618, they are there, but it probably will be to just validate the resistance of your 1596 before eventually reaching your 10 cent level. Please be very careful, okay, team? Now, if you would like to learn and understand how this works, I am definitely starting a new mentorship program, and that's going to be through the ArcMastersCourse at gmail.com, right? So this is going to be the strategies mentorship program for trading. 8 to 12 weeks is going to be the duration of this course. And I would like to encourage you to reach out to me at ArcMastersCourse at gmail.com. I'll pass you the disclaimer. I'll pass you the syllabus, and we'll get you enrolled, right? So make sure to take advantage of those seats, because these seats are the priority here is given to my existing master students right now. So if they fill up all the seats, they fill them up. All right. So I need you to take advantage of it immediately, so that you can be able to, secure one of the seats right away before they all leave. All right, team, I appreciate you for coming on out. If any questions, you know where to reach me, and I wish you well, right? Please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. Never, 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 ever. I need you to do your own due diligence, and everything will be cool. But with that said, team, I wish you well. A very, very good rest of your night. And I will catch you at the bell mañana. Adios, team. Oh, yeah.